Good day folks and welcome to Best Trade Setup, and in this video I'm going to finish up the rest of the week's analysis from the 26th to the 29th of December 2023. And here we have the 28th of December 2023 gold. This is the before. This is a wider picture, a wider view of the trade, of the chart rather. I then added another position because I saw price action supporting further bearish. Price eventually reached both take profits. This is the 15-minute time frame. Now, this is what I was looking at to determine whether to enter sells or not. What we have here is candle patterns that do confirm sells, and also a close below the 20 EMA, but we would be selling into an order block, this 5-minute order block right here. So every time I sell into an order block, I need to see a peak formation high and a consolidation afterwards, and then a breakout candle engulfing that whole consolidation, as you can see right here, closing below all of these candles below this consolidation area. So what we have here is a fake out in the form of an M pattern. So every fake out is an M pattern, and then fake out in the form of an M pattern. The first leg we have an engulfment. The second leg we have a sweep of this level, and with every sweep is an M pattern. We have an engulfment here, a bearish engulfment, and we have a 3CP, and then we have price closing below the 20 EMA. We now have enough confirmations for sells, but because we're selling into an order block, I had to wait for the consolidation after peak formation high. This is the peak formation high, this V structure here when you look at the line chart. So immediately when this closed, I indicated with the red vertical line that it's time to take sells. And this here we have a 3CP again at this level right here, confirming for the sells. An entry here can be taken, and then here as well an entry can be taken. This whole movement is a break and retest in the form of an M pattern. The first leg is an engulfment, as you can see here, and also has a 3CP. The second leg has an engulfment and closes well below the 50s level. Here is a closer look. At this point in time, we are at the high of the week. FRD stands for first red day. This is a concept I learned from Stacy Berg. You can go check his channel out. It's called Stacy Berg Trading. Some of the things that I use in my trading analysis does come from him. In the later videos, I will explain what an FRD is. Here's a wider picture, a wider view of the chart. This is where we took sells. This is the line chart. As the day continued, I entered sells here, but very incorrectly entered so. A valid and invalid sell, by the way. And then we have price hitting stop loss. So what happened here was that an entry here was possible because at this level, this break of structure level, price did form a 3CP and an engulfment. That is enough for us to take sells, given that sells has been confirmed already here. So this would be in support of a sell where we can get at least a 1-to-1 risk to reward. Now where I took sells was here. As you can see, price went up and hit the stop loss. Now in this area here, we do have confirmation for sells. We have a fake out M pattern, fake out in the form of an M pattern. If you look at the line chart, you'd see the price go up, and down. And then this is all happening in a 5-minute order block area. Here, candles confirming or supporting the bias must be at a significant support or resistance level. This is a significant resistance level because we broke structure on the 5-minute, therefore creating the 5-minute order block and this high right here. Here we have a sweep and pattern inside the 5-minute order block area and rejecting off of the quarter level, so we can take sells here. And as you can see, price continued going further down. I then entered another trade. At this point in time, I am definitely over trading because I usually take, well, my rules say I should take 1 to 2 trades per day. and the first two trades that I had taken were wins. I should have just walked away, but greed got the best of me. Remember, I'm not a guru, I am still learning, but I'm also getting better with time. So things like this do happen. So here, the stop loss got hit again. So now we have two trades that won and two trades that lost. But luckily, like the first two trades, the R&R was actually more than just one. But that does not justify the fact that I was over trading. Now, when we look at what price did here, we see that we have a fake out M pattern, fake out in the form of an M pattern. This right here, price goes up, comes back down, goes up and down. This is a fake out in the form of an M pattern happening at the 5-minute order block area. We have a 3 candle pattern right here, closed below the 20 EMA and rejecting off of the quarter level. So these right here validate sells. You get at least a 1-to-1 risk to reward. Most of my trades, I would close them at a 1-to-1 risk to reward, but when I see a setup that has potential to give more, I'll let the trade run. In this instance, we do have price giving us a 1-to-1. We can hop out and call it a day. Candles close below 20 EMA right here. 5-minute order block range. When this happens, there's a high possibility that price will continue going down because of the bearish bias that presents itself. Now here we have price closing below the 20 EMA and therefore continuing to go down. Here on the other hand, this is not a valid VCP. If it was, we would enter sells again, but as you can see, price did continue going up. Where I had taken the buys earlier on, there were no buy signals but rather sell signals. As you can see, we have a fake out M pattern right here in the form of an M pattern, the fake out that is, 3 candle pattern in the form of 4 candles where we have 2 green candles, 2 bullish candles and 2 bearish candles. If you add these 4 up, it would form a pinned hammer, therefore rejecting the upper level or upper area. Here we have a VCP formed by 4 candles again, an engulfment, bearish engulfment, and rejecting off of these level, double zero level. Price then continues to go down. Note on the VCP, pin hammer as middle candle, it is valid. 4 candles forming a pin, it is valid. Middle candle above halfway point of the first candle in a bearish VCP with 3 candles and vice versa. If you go to the previous video, I did explain what exactly a valid VCP is. And then I had a 5th trade of the day, well above my trade limit because it's 1 to 2 and I'm on the 5th trade. Price did actually work out. Now the reason why I took those sells was because here we have price breaking out of this consolidation right here after a peak formation high. Therefore, I figured since we've been bearish all along, price was most likely to move forward in this direction. And then here we have EU on the 29th, closed partials. Price eventually reached take profit level. The reason for taking this was because looking at this area right here, price did a fake out. The daily fake out is an M pattern, and this fake out is in the form of a triple top, up, down, up, down, rejecting off of the quarter level. We have 3 pin hammers right here. 2 pin hammers is equals to 1 confirmation, so we have actually 3. That's more than enough for 1, but not enough for 2. Now the third peak is an engulfment, a bearish engulfing candle right there. Enter sells below the 20 EMA when candles have crossed below the 20 EMA. Price did go back up, and if you look closely here, it forms a 3CP. Whenever price forms a 3CP or an M pattern at a level, here the stop loss level, enter trades again, and they're most likely to give you a 2RR outcome. There we have it, a second chance trade. And then we have gold on the 29th as well. We entered the sells here and then got out right here, closed partials, and price did actually end up going up, didn't go all the way down. And the reason for taking these sells was because this is a fake out in the form of an M pattern. Fake out in itself and M pattern as well. And then we have this rejecting the quarter level. And on the first leg, we have a 3CP formed by 4 candles. Already we have price forming bearish biases here. So having an M pattern at a significant level such as this one is enough for us to enter sells. Or even if it was just a 3 candle pattern, it's enough for us to enter sells, aiming for a 1-to-1 risk to reward, and you got that one. Feel free to pause, take a look at all the notes that I've written down addressing what exactly was going on with the price and what I was looking at to determine this bearish bias. Thank you folks for listening in. I'll catch you all on the next video. Till then, cheers.